The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
It is a beautiful Monday, September 17th. It is Constitution Day at TFNN.com. If you would like your Constitution, you can always call our office or you can email us at sales@tfnn.com and request a Constitution. We've got about 6,000 of them left. We ordered them when we thought that probably there wasn't going to be any need for them. Actually, Tom got a really good deal on them and got a huge warehouse full of them. But if you don't have a copy of your own Constitution, you should absolutely get one. It is exactly what everybody should read these days, especially when we see people arrested and put in stocks for being stupid. We see this guy arrested for making a videotape of extremely poor quality. What happened to free speech? If somebody that the current powers that be did something, I don't think that they'd be rousted out of bed at 1:30 in the morning to do that. What happened to that all freedom of speech? Too many people are using the Constitution for toilet paper these days, and I think it'd do a lot of us a lot of good to read this thing a little bit more often, especially people in offices of power that have no bearing. Part of the Constitution gives us the right to be stupid and say stupid things as long as we don't incite other people to hurt other people or to cause damage. We see that exactly going on in, 20-plus countries right now. They almost have I would almost call it a mass insanity that if you say something that I don't like, we're going to do something bad to you. We went through this, about 400, 500 years ago in England. People were doing all kinds of horrible and nasty things to people because of religion and just because they like to. We came out of those dark ages, and now we need to be able to show the way of people that are several hundred years behind us, at least in their culture, to come out into the sunlight. People were pretty darn brilliant when they came up with the Constitution, and we just have to thank our lucky stars that there were a lot of people that weren't power and money hungry to start the country. Today is the day it was signed in 1787, and we are very much luckier for it. When we have a world, actually even a country, that says that one of our Supreme Court justices that says that our Constitution's a pile, and we should be. If you really wanted to get a good Constitution, you go to the South Africa and get their Constitution. Basically, it's a load of communist crapola. But, we have people that are actually supposed to rule on this, and they hate our Constitution. I think there should be at least some regulation that if you're going to be a judge of it, you better like the darn thing to begin with. You shouldn't be trying to overthrow the government from within. But just a few of my opinions. Get off my soapbox here, start talking about stuff. But I think we should be very happy that I can say anything stupid that I want within reason. And the worst thing that someone can do is turn me off. They're not going to storm my embassy because they don't like what I have to say. In the news, 2 million iPhone orders, kind of the big news of the day. Of course, the PR machine on Apple knows no bounds. They were supposed to sell 10 million units between the 21st of September and the 30th. We already knew that. It's going to come in shy. It's going to be about 8 million. That they sold 2 million in pre-orders doesn't make a hill of beans. We already knew that they were going to sell every one that they can make up to 10 million. They're only going to be able to make about 8 million, and probably the numbers are they're probably in there already. I know we tried to actually get to 700 on Apple today. I just maybe I've seen what they do. I know what they're doing. I'm immune to their Jedi mind tricks for controlling at least what I know, and maybe I'm just resistant to it, so I can tell the difference between up and down, left and right. That I don't spend so much attention. In fact, I don't think that it's a great trade out there unless you're playing options on it, because it's a fairly expensive stock. The rule of large numbers comes into bay on it, but for what it is, I still think that I'd probably want to own Google if I was going to own a giant behemoth of this size. Google has, I think, a lot more opportunity to turn their ecosystem into big bucks. Apple has already done it, and I look at the rest of them, and some of them with 10 times the earnings per share, not 10 times the earning per share, actually valued at 10 times at the same value per share as Apple. There's a lot of other fat companies out there, so Apple isn't one of them. The reason why Apple isn't at $1,000 right now, if it was valued like Amazon is, it would certainly already be about $1,200 or more. In fact, I can't remember what it is. It's 71 on Amazon. I'll have to look it up during the break. It's absolutely huge. The reason why is Apple's been known in the past to come out with a new product only to be swamped by other folks. They kind of cannibalize their iPods with their iPhones. Their iPads may cannibalize some of their computer business. They only make half of what they do on an iPhone on an iPad, so they're going to have something that actually generates a lot more revenue also. So just don't get too wrapped up in all the hype. Probably the funniest thing was a Jimmy Kimmel interview on the street last week where he took a iPhone 4, it wasn't even an iPhone 4S, I think, and went around telling everybody how it was the brand new iPhone 5, and no one knew any different, and no one said anything. People are, they buy Apple products. They don't want to get mired in all of the details out there and the technical jargon for the most part, and they really don't care. They just know something's new. Apple's done a wonderful job of telling them whenever they have something is new, their customers must buy it, and for the most part, they come along. I just know that in the rest of the world, price is a huge issue, and Android is doing an exceptional job of at least coming in and being a competitor to them, even if they're not reaping the rewards that Apple is as far as profit margin at this time. We saw kind of an interesting thing over the weekend, and that was a referee for the trying to remember the was it the Saints? He was refereeing the Saints game, I remember. He was kicked out because he had on his Facebook page pictures of him basically tailgating and having a jersey on from I guess from the Saints. You kind of think, of course, these aren't the regular referees, but you got to think that probably somebody out there had a bias. These guys haven't been sitting at home watching soccer. If they're probably being a referee, they probably were interested in football, probably had favorite teams. The thing that I find interesting is they kicked him off, but just a kind of a bad chapter in actual reporters and our media. There's a CNN reporter that's actually fundraising on his Twitter account. Why is he any different than the referee for the Saints game? Doesn't matter who, what candidate. If you're raising money, can you really be a reporter? Just a thought. BMW cars produced since 2006 have a huge flaw in them. I don't know if it's a gentleman or it's a company, but I saw the article, is selling a little box. It will generate a key for all BMW cars produced since 2006 that will, in 3 minutes, will go ahead and start a BMW car, allow you to drive it away. Not gone in 60 seconds, but gone in 180. The more we rely on straight technology, the easier it is to bust. And a pretty good example with BMW. Apparently this is a huge issue, is these either it's a guy or a company is selling these boxes to make these keys, and BMWs are becoming rapidly the car to steal. Car theft has gone down fairly extensively because of all the safeguards. Being able to produce a key that will start a car in 3 minutes, not such a bad day. I think BMWs are going to be stolen a lot here in the near future. We've talked about the internet and it running out of IP4 addresses, and eventually it was going to become an issue. The RIPE NCC, which is the regional internet registry for Europe, the Middle East, and all parts of Central Asia, is totally out of IP4 addresses. There had been little remnants and little places in the giant table of numbers left over, but they are gone. I think that we're going to continue to see at least some strength in some networking stocks as everybody has to move on. Of course, the most expensive companies have already upgraded their software, so Cisco's probably not going to make a lot of money out of it. Lucent, Alcatel, those companies probably not going to make a lot of money, but as we go downstream, we're probably going to find a lot more companies that are going after consumers and low-end business that probably will eventually have to upgrade their units. They've been able to put it off for a great deal of time. In fact, probably good 6 months after I thought that it would become an issue. Right now, Yahoo, Google, almost all the big internet portals are all using IPv6 address schemes. If you want to think about it, it's kind of like the difference between when the phone, you used to pick up the phone and call and say, I want to talk to BR549, and they went to 7 digits, and then they went to 10 digits, and you didn't even need an operator. They just keep adding numbers to it. Right now, there's in IPv6, there could be enough IP addresses for every grain of sand on the beach in the world. So we're going to have plenty of IP addresses for the foreseeable future. But it is becoming a problem. As we look at the market, I wanted to check in real quick just to see. I mean, we're off about 5 points, 6 points. Market's gotten a little bit weaker as we've gone along at 5.5 points. We're at 2 billion shares. We are back to fairly light volume. I think we're about 2.8 billion in the first segment of the show on Friday, so fairly light volume so far today. We will be back, and you can always give me a call at 877-927-6648.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, trying to look through the news, see if there's anything that really could move this market a little bit. I suspect it's all risk-based right now on what happens in the Mideast. We got a ton of ships in the Straits of Oman. Again, I brought it up several times. There's a pipeline that should be able to carry all the oil that they normally would take through the Straits of Oman already built. They're building a secondary one that would even be able to bring a lot more oil across and out of the way of Iran. So I'm kind of, other than the whole nuclear issue with Iran, I'm kind of wondering if there's actually a lot of reasons why everybody would be so upset about the problem with oil. I think the market is agreeing with me. It's crude's off about $3.60. Last quote I have on here, I think, which is a little delayed, is around $95.90. But I'll have to check. I don't know if there's some other news that's out there at the moment. But we can always be interesting. I was talking about OIS last week on the show. Let's see how that looks, which was Oil States. Looked like it was one of those stocks that was making kind of a long-term high or trying to get into it. We could still have a little movement in it, but it got awful close to the previous high, if it didn't go over, 2 cents shy. But it came up there on about 50% volume. So this was one I was talking to Tom about late in his show on Friday. And it just kind of interesting. We saw a lot of those stocks in oil setting up for a possible reversal. I don't know how far these things are going to reverse. This one actually would have a little bit of movement. Last gap down and volume was somewhere around $75. So probably not a bad move in that if you get it back just to the gap around that $75 level, which was also the last big sign of volume where it actually came down, gap back up, and moved through here mostly on mid-east tensions and the belief that we were going to start throwing money from every kind of moving device that Ben Bernanke could ride in. And I think we've got that. Anyway, I wanted to look at some other stocks that don't seem to be quite reacting correctly, I would think, to the marketplace. One was AutoZone. Still not exactly sure why this thing had a just a miserable day down. The volume didn't really come in that high to comparable lows out there, so maybe a little bit of washout. AZO. But the volume, pretty much other than the Friday volume out there, not all that bad. I didn't check to see if I saw any new headlines on it. But there's a couple other stocks that are being very, very interesting what they do. Let's see if I saw anything else. So sneak peek, AutoZone sneak peek. Maybe that was what, and I didn't see anything on Friday on it. I have to do because my wonderful engineer a lot of times will say, don't have any dead air. So I've learned to do. Yeah. Did I actually say that? Yes, I did. Zone preview cheat sheet. I guess just some people coming out thinking they're going to be a little light. And of course, everything's set up right now. But I don't see anything in the news right now that really brought a lot to the party. I'm going to look at some of the tests that we had from last week. LinkedIn was another one. Kind of interestingly, light volume up here today. We are looking at LNKD, which is LinkedIn, the social networking for businesses. I always like this one much better than Facebook. But it's looking a little toppy out here right now. And, of course, any kind of decent pullback, I think, could easily bring it back to about 110, which was the last big sign of strength. It broke through that on higher and higher volume. Of course, they've got a much better business model than Facebook, which is also kind of moving up. I said don't get too excited about Facebook falling apart. Because it was only in the hands of 3 major holders. They do a lot to go ahead and get Facebook looking good before the unwashed masses that own a billion shares. A lot of people that are in the company that aren't beholding and would love to sell it even at $22 are coming online in October. We'll look a little bit stronger at Facebook when we come back. Give me a call, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
I'm going to look through some of the stocks out there. Netflix being one of the weakest in the NASDAQ 100 out there. In FLX. Off about, almost 6%. Nice little move out here. I have it, yeah. Kind of interesting, sideways day. Still needs to come back and test this high volume low at $53.13 from September 4th. That was 12 million shares. Should act as fairly decent support. I had Netflix for a long time. I just canceled my account about 3 weeks ago. They used to be getting a lot of movies that I wanted to see, especially documentaries, but lately they haven't got a lot of them. I wanted to see the ones. There's a couple of really decent ones, musical, and they just not carrying them anymore. Not exactly sure why. Trying to, I guess, switch most of them to online, but the quality's just not there. If they shot it in high def, I want to see it in high def, and most of the time the ones that they stream are NTSC demos, but there's a couple of really good ones. There was one on Bob Marley that just came out. Of course, they didn't have that, and a couple other ones, so I finally got tired of it, and maybe they'll end up getting them again, and I'll call in, but I want the actual Blu-ray disc. I'm tired of these low-quality ones. Why did I buy that big TV for anyway, if not to have wonderful quality. Anyway, this thing's got a high volume turnaround, a couple of them actually, and should be in fairly decent support levels. We really need to notice when it comes down and tests 53.13 how this thing's doing. If it does break apart at this point, it could be going much, much lower. You could look at this as kind of an extended ABC down. If it does, that could probably, I don't know, I won't do the calculation on it, but pretty massive if you're looking at the ABC from $122 down to $60 on June 1st, and look at the B point June 13th. This could be kind of an extended C leg or D leg out here. Could go very much lower. Of course, this company basically shot themselves in the groin. I guess you could say in the foot too, but I like to say they shot themselves in the groin over going from DVDs and Blu-ray discs being mailed to actually online. The problem I have with Netflix is just it's the same problem I had with Groupon. What really separates you differently once you go online and you start streaming? And I think the question is almost nothing. If you've got the technology to back it up and some money, you're going to find some network gurus to set the thing up right. The biggest problem, too, is what happens when Comcast and all the other people that are supplying Internet to the rest of the downstream viewers, especially in foreign countries, how do you make sure that it isn't like water rights out in California where they just turn the water off in your field and your animals all die? They're exactly too far downstream to control it. I think that's why you're seeing Google get very active in the providing of their, possibly providing their own internet, and at least being some kind of form of competition, maybe even better. Brought up, I think, last week, either Thursday or Wednesday last week, that of the first 220 fiber hoods, 190 have already hit the threshold to get set up with the 10 gigabyte, I think, is it 10 gigabit? I think it's 10 gigabit per second Ethernet connections that they're going to have locally there in Kansas City. Wanted to look at some other ones. NVIDIA, it's off about 3%. I wanted to just check in on this one, NVDA. Well, maybe we got some movement here. Want to check back in. I'm busy looking at charts here, and maybe we are having a nice little move. But people in the den are getting me a little excited, making me want to actually change. Oh, I'm looking at the wrong thing. Hang on just a second. No wonder I can't find it in this giant list of 100 stocks. I'm still showing 460 on the S&P, so unless something's new, not a whole lot's happening. So let's go back and look and see what else is moving in the NASDAQ. When we look at the best performer, let's see, get back to that just a second here. It's not interesting seeing how sausage is made. Well, I'll tell you what, Intuitive Surgical is probably the biggest mover out here today, up 1.7%. We really don't have a huge mover. ISRG for Intuitive Surgical. And of course, try that again. Is that right? ISRG. Oh. Dyslexia Cure 4 found. As soon as I can RG type correctly. Yeah, Intuitive Surgical, biggest mover. Looks like it's going to try one more time to enter the gap at $520. We continue to see this thing be kind of one of the highest flyers out there. Of course, they make robotic devices for surgery, like knee surgery, transplant surgery, all that kind of stuff. But by using extremely precise devices that are robotic, they can make much better and finer cuts, leading to a whole lot less trauma. And Intuitive Surgical's big on that robotic arms, especially knee surgery. Everybody wants to go to it. I know somebody here just had back surgery, and they were kind of waiting for that robot to be available so that they could actually get into that. But looks like it's going to, after its huge move down on high volume, looks like it's going to get back up to 518. That huge volume day down to 467 looks like it really needs to get tested yet again. It had kind of a mild test back on 8.2, but we'll continue to take a look at that. Anyway, we've got plenty of time. You can call me at 877-927-6648, and we can discuss what your particular stock is. Another one that's on the high end, let me see if there's anything else out moving that we need to be watching. RIM, it's off about 4%. Siri, don't think much of that one. NVIDIA, Baidu, I haven't looked at Baidu for a while. BIDU. We will continue to look there. And there we go. Baidu, boy, it still looks like that 99.71 was a good buy point. I think somebody in the den actually bought it, was talking about it. I thought that it had probably a whole lot less movement out here. But it had a nice move up to 134. It's pulled back most of the way. And we're going to go to Mike in Lakewood, California. How you doing today, Mike?
Pretty good. How about you?
Fantastic. Calling in about Mako.
Yeah, you were talking about ISRG, and I was thinking about Mako anyway, so it's a perfect reason.
Of course, this chart looks a whole lot less like Mako, like ISRG than that. They had two back-to-back earnings announcements that were poor, if I remember right.
That sounds right, but they're starting to look better, and I'm just wondering if it's in sympathy with ISRG or because they think Obama's going to win, or...
No, if I remember right, people just weren't buying this, or their robot was a little different. And I remember looking into this company and then saying, well, it's, maybe it'd be pretty good. I don't think it's anything other than the doctors are not buying this particular model. I think that we've seen weakness both in Intuitive Surgical and this one. But I have a feeling it's more about the economy than Obamacare at the moment. I think a lot of people are still buying stuff going into it. But I've got a good friend that is, his wife is the, I don't know if you want to call him the boss of a major hospital. I've known the guy for about 10 years and talked to his wife a lot of times. Been water skiing with him, right, Sea-Doos and stuff when I was living back up north. They're basically not changing anything that they do based on that. I think that they can't do anything about it anyway. So they're just going to do what they do and hope that it goes away. So I think more of it is an issue with just how much money they're making. And a lot of these doctors had the choice of begging administrators for more money, for machines, or to keep the amount of money that they were making and not get pay cuts. And I think a lot of it has to do on both Intuitive Surgical and Mako to a bigger degree, was this that we weren't going to buy these machines so I can keep making the same amount of money I was making before.
Okay, well, that's good insight. I appreciate it. Thanks very much.
It's anecdotal. I don't know that many hospital administrators. But she was pretty sharp. They said the doctor's not asking for a lot of machines lately because they know if that comes out of the budget, then we'll have to come after them, especially with the Medicare cuts and the doc fix coming in late. And my understanding is even some of the nurses are looking at some pay cuts here coming up on Obamacare, and a lot of these people are saying, hey, don't spend a dime if you can keep rolling some of that money into our salaries. You don't have to buy anything new. Before it wasn't such a big deal, but I think that they all know that I think you're a little bit right on it, but I think they're more interested right now just in the thought that if they spend money on machines, it may not go to them.
Because I do know that Mako does a different grouping of procedures than ISRG does. I don't remember exactly I think it's more orthopedic, but I could be wrong on that.
I think both of them are fairly orthopedic. All those ISG, Intuitive Surgical, I think does a lot more thoracic. Let me see here. I'm looking at it. Orthopedic implants, orthopedic. I think they're very focused only, like you said, on orthopedics, where Intuitive Surgical does literally everything from chest surgeries to going in and fixing ruptures and that kind of stuff.
They'll do prostate and.
Yeah, there's a lot more intrinsic stuff instead of just knees and arms and all that stuff, right?
Yeah, because I was thinking that's why Mako might not be hit quite as bad, because they're doing something that's, well, a little less expensive, not cheap, obviously, but less expensive, and there's going to be a lot more of those, because I'm a baby boomer. I'm 65. So.
Well, when I'm reading about them here, I didn't remember this at the time, but apparently they have their own brand of implants for use in single and knee resurfacing procedures. Company markets products through direct sales force, while through independent orthopedic project agents. And of course, I actually filmed hundreds of these operations back in the 80s as a late night job when one of the guys at the company that was doing video production left. And I was basically doing a lot of work on video, but from a computer standpoint, got cross-trained. You know, it's I guess now it's like that was like the dark ages in the 80s, actually even the early 80s. But I'm going to have to look at this a little more and find out exactly what Mako does. Just when we look at the chart, it's back up to trying to fill the gap somewhat. And it's about halfway through it. I don't see any real energy. Are you watching on Tiger TV?
No, but I don't have enough bandwidth, unfortunately, to be able to handle it with my computer. I was looking at a chart on my trading software, so I know what you're talking about. I
mean, the energy down was huge. You have a light volume pull up. I'd still say that this thing has to come back down and test the previous low at 11.99 before I'd be interested in it and see fairly light volume. It may not only get down to that high volume day down. Even then, that was at 21.7 million shares. You'd at least want to get into that, I think, which is in the $14 range. So I'd at least have to wait for this thing to come back at $14 and see if that isn't support now, and see whether if it's going to drift back down to $12. At $14, I mean, even then you're talking about an 17% loss back down to $12. I'd almost like it there better. Let me put it that way. But,
okay, well, thanks very much.
Not a lot of volume or not a lot of energy on the way back up.
You have a good day.
Thank you, Mike. And we're looking at 877-927-6648 if you'd like to call about your particular stock to see if there's anything else. I wanted to see how Fossil was doing. Another one that got smacked around fairly strongly, FOSL. Off about $2 today, but it had a huge volume day, or not a huge volume day, it had a huge day on Friday, but not much volume. When we come back, we'll look at Fossil and a couple of these stocks moving before the end of the day, and check up on the volume of the broad markets. Give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We came back, we're going to look at Fossil. I had a couple of comments in the den talking about when can we expect QE 4, 5, 8. Most of the pundits now I see on Wall Street are already calling it QEP for permanent. So they don't have to wait for 4, 5, 6, and 7, and 8 in perpetuity, as it would also be called. But looks like Treasury can actually print a lot of money. We'll get to Fossil here in just a second before the end of the show. I did go to the Treasury fairly early. I was taken as a school trip. I think I had to be 14 or 13, so 1973, 1974, driven to downtown Kansas City, got in a school bus, went down there. They were burning money that day, and they gave all the kids a million and a little over $1 million. in a cardboard box that we got to throw in and burn $1 million. Before they burn it, they actually stamp, or did then, a little kind of like triangle out of it in several spots. And I guess that's to let everybody know that those are bills that they're supposed to actually burn. But also, if they got out in the wild, everybody would know that where they came from, and that was where they were supposed to be destroyed. Of course, kind of ratty money, but kind of neat that I was burning over $1 million. I threw it into the fire when I was 14 or 15. But of course, the Treasury prints the bills. It's under their directives. We're talking about whether or not we should be buying printing press stock, but I don't think there's anybody that actually, I think they can run those just as fast as they want to. But fossil, when we get back to it, it's kind of interesting. It's it's back up here pretty much at the gap down level. Saw a little volume come into it, but nothing compared to the last attempt to get back up into this gap. FOSL, one of the retailers, they had a nice little run. I guess people buying their watches, now people not buying their watches. FOSL is the symbol, but we were looking at the, I guess it's the July 7th high out here, which was, what is that, $93.45. It had 7 million shares. You pretty much had 2.4 million shares on Friday as you got back into it. It's still in that neighborhood of having 7 million shares, but you're going up against that gap, and it's going to be very hard moving. I'm going to say that if this market decided to turn, this would be one of the better picks with a test of the low down here at $62.77. A pretty good idea, I would say. This one's got gaps down below, gaps above, but I think probably get a good idea that this thing wants to go back and fill that market. We talked a little bit about oil. I thought maybe they'd try to come up and fill these gaps here over the next couple of days. Of course, it has rolled over. I had a question. Did dual control at Fed on burning up? Did you get a clinker after the burn part? I don't know what that is. Get a clinker. I don't know. Can't remember. I didn't get anything. Somebody had a question about whether or not I actually got a clinker. I don't know what a clinker is. Maybe it's a thing that put the little diamond hole in it. But we were looking at that in OIS. Probably OIS looked like it had the better one. I still thought maybe we could get back into that gap, at least on OIL, which is the Oil Total Return Fund. Doesn't look like, well, the volume's not all that great now. We can still fool around here and get back up to that gap at $25 on oil. So maybe a respite in the move with crude at least down a little bit. Okay, even gold off a little bit. A little pullback, maybe a little irrational exuberance before the weekend. You all have a great and safe day. I will see you tomorrow.